The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. And if you happen to miss an episode, you can catch me on Spotify. You can catch me on Apple. You can go to my website, themainstreetcode.com, and take past episodes. And we are specialists in the area of life insurance, disability, long-term care, and annuities, and life settlements. And we help hundreds of advisors across the United States, whether they're attorneys or CPAs, with their insurance needs, and help devising plans for other agents that need an independent voice and direction. And, you know, everyone is unique in their planning, and we offer unique solutions to help you. And we also recommend that you have a team. Whether you need an attorney or accountant, and if you don't have a team, we like to meet with your team, and so that everybody's on the same page helping you achieve your goals. And today I'm very happy to have with me Glenn Usher. Say hello, Glenn.
Hello, everybody. Thanks for having me.
Thank you. I've known Glenn for years, right? How many years have we known each other?
I was thinking about it. We're probably coming up on about 10 years. 10
years. Fantastic. And Glenn is one of the premier experts on long-term care. And you know, I talk a lot about long-term care coverage and solutions because it's a big issue. And you need to realize one of the major things that can happen to you is, most people have a fear of running out of money. Why? Because we're living longer, right? So running out of money is a big fear. And then what if, you know, I start to fail, and who's going to take care of me? And people have the misconception that their health insurance is going to take care of them, and anybody who's dealt with this realizes that it even says, even when you do your Medicare application, we don't take care of any of the basic services, right? I mean...
Yeah, and I think it's, you know, at face value, the fact that we're all living longer lives is a great thing, but I think the misconception is that living longer and living healthier longer don't always align. So
True.
That sort of gap between, you know, health span and lifespan. Lifespan is obviously a binary, right? You're either alive until you're not. Health span, I think, begins to get a little complicated because, you know, you're going to live hopefully a long time before you have any sort of, you know, chronic impairments or anything that's going to be limiting, whether it's cognitively, you know, your brain functioning or physical impairments. And that gap between health span and lifespan is really what we're talking about when we say long-term care. But I think it's important to point out, you know, most folks have an idea about long-term care and immediately, you know, their mind goes to, it's, you know, when you have to go to a nursing home, which, you know, can be true. That is one form of long-term care, but it's everything that precedes that after the health span runs out and then between when the lifespan runs out. So that could cover anything from home-based care to assisted living, adult daycare. There's a lot of different types of services out there.
Right.
But it's, you know, it's one of those things where, you know, I think there's just a lot of misconceptions around what you can and can't do to help prevent it. And all of the things that go into it, you know, I think it's tough because we generally are making decisions based on how it's going to impact us. And right. Long-term care is a conversation when really at that point in time, you're really trying to put a plan in place to protect the rest of your family and not just your family having to set time aside to help take care of you. It's really all of the other things that go on, the emotional toll, the family dynamics that oftentimes change because different family members are stepping up and providing different levels of help, whether that's financially, whether that's emotionally. There's just a lot that goes into it that I think most of us are happy enough to put the conversation off and cross that bridge when we get there.
Right.
Unfortunately, that bridge is coming, and folks just don't put a plan in place.
You're absolutely right. And it's funny because I had a group of attorneys and accountants as part of a networking group that I founded. And we went around the room, and I just went to each person, and I go, hey, what are you going through? And this one, my attorney friend says, well, my mom's in Florida, and she's in assisted living. My dad just passed, and she's having health issues. And my mother-in-law's in Florida. Oh, and by the way, I've got 2 grandkids, and my daughter's not making enough money, this and that. So he's running back and forth there. I go, but you run a law practice with 10 other people. And he goes, yeah, it's very stressful. and financially, of course, it's an impact. Emotionally, he's torn. Do I run to Florida? Do I take care of the kid? I mean, I got a business to run. And everyone in the room, without exception, has a story, whether it's their own personal health, or they're a caregiver, or they have to deal with other. It's just ad infinitum. So when I got into this business of helping people with solutions for long-term care, they would give you facts and figures about long-term care. I mean, back in the day when we both got into this, they said, okay, 1 out of 2 people are going to need help. That ain't the case. It's everybody needs help. Mm-hmm. And the figures are, the calculus that the insurance companies give you, and I don't even think this is realistic, I think this is low, is 70% of us are going to need some sort of care outside of medical insurance to help us take care of us. That's the number they're throwing out now. Well, I got to tell you something. The people that are suffering at home aren't included in that 70%. And it's the other 30% of us that are taking care of the 70%. So it affects 100% of us, long-term care.
Yeah, I would say that's absolutely true. And to your point, that's of the documented care providers. 70% are going to require some type of, skill, whether it's a skilled person coming out to your home. That doesn't necessarily take into consideration. And there are industry estimates around this, but I think the real burden that falls on is, generally speaking, if you have a spouse that's able to provide some level of care to you, they're going to do it until they're no longer either physically able or they're not around. Then it's going to fall to the kids, which, we mentioned, maybe the kids live around you, maybe they don't. Maybe it's feasible for them. Maybe they have kids. Maybe they're working full time. So, right. I've seen countless examples of folks that, they go from full-time work to part-time work because they've got to take care of mom or dad. And that's, right. Not only just the lost wages, that's also, you're not contributing as much to your 401k. You're not contributing as much to your IRA. So that compounding right. financial aspect over the long term.
And you may be foregoing support of your children who need it. In their formative years, in their teens, or even in their 20s, or in their 10s, and the parent is 70 or 60. And it can happen at any age. And this is the dilemma we have today. And who's going to pay for all this care if our children can't, or we don't have children? The number one provider of caregiving services is?
Medicaid.
Medicaid, the federal government. Okay. Now, I know a lot of you listen to the news, you listen to the station, and you listen to the big, beautiful bill and all this. There's Medicaid cuts out there, and Medicaid makes a decision on how much care they're going to give you. Like, they may give you 1 day in your house. Well, you may need help getting up out of bed, going to the bathroom. And how about who's doing the lawn? Better hire a landscaping service and a house cleaner because you can't physically do it. And these are things you're not thinking about, but this is really what's happening. And how's this all going to play out? And do I have to hire people for myself? Or do I have to rely on my daughter or son to come home? Or the federal government to come in 1 day a week? And then as the services get cut, it's a real problem. So the biggest issue I see is middle America. Not the guys making $1 billion. The everyday people have this big problem because in order to get this Medicaid, they have to impoverish themselves. And a lot of these elder lawyers and listen, I love elder lawyers, I love attorneys, everything else. Their goal is to get you on Medicaid, lose control of your own assets and money, put it in trust, do this, do that, do the other thing. Basically, they're saying, lose control of your money, then we can get you on Medicaid and have the government pay for limited services. So we're getting ready for a break, but after the break, we're going to talk to you about how to insure yourself and not rely on that fact or the legal fact, although it's important. So we'll do right back after the break. This is Neil Himmelstein. If you want to get a hold of me, 631-647-4694. And Glenn, I don't have really a contact info for you, but if they want to email you, do you have an email address they can send you an email?
Sure. It's glenn.usher@gmail.com.
Fantastic. And we'll be right back after a quick break. Welcome back to the Main Street Code for Financial Success. If you were here before the break, we were talking with Glenn Usher. Glenn Usher is an expert in long-term care, insurance planning, and we didn't get to the insurance planning part, but we talked about the main insurer for your long-term care needs, besides your family, is Medicaid. Medicaid is not Medicare, right?
Yeah, and before the break, we were talking about the potential cuts that could impact Medicaid, likely will impact Medicaid. And I think you sort of look through the domino effect of if those cuts happen, A, where are they going to happen? And then B, what's the downstream effects of that? And I think, one of the first to get cut would be the HCBS, the home and community-based services. And that's, frankly, what allows folks to kind of remain outside of a facility-based setting. So whether that's personal care services that you were talking about before the break, the challenge there is, okay, if folks can't receive care in-home through Medicaid, then they would be forced to go to a facility-based setting to have access to that care. The downstream effect of that is 60% of existing nursing home residents are being funded by Medicaid. So if there's additional cuts there, I'm no economist, but if the nursing home isn't able to get the same benefits that they're currently getting, the prices to stay in a nursing home or prices to stay in facility-based settings is likely going to rise, or the nursing homes are going to have to ultimately, end up closing shop because they're going to miss out on the funding. Closing shop or consolidating. Exactly right. So, the best way to sort of prepare for that is to ensure that, you're not waiting for the federal government to tell you, where you can receive services and how you're going to pay for them. Now, wouldn't it be horrible if Medicaid says, okay, we're going to accept you in Medicaid, you've impoverished yourself, and now we're going to send you an hour away from where you live because that's our closest facility, and you have no choice in the matter, and maybe the care there, you'll be in a room with other people, semi-private room, not the best, and that person you're with could be screaming. And I mean, I've been in nursing homes and they're not fun places. Well, some people are there long term and it used to be, 3 years. I'm finding that people are in nursing homes until they die. I mean, it's just like, it could be 8 years, 10 years. I've known people in nursing homes, and the cost of a nursing home is ridiculous. I mean, even the best settings, you're in Long Island, you're looking at $500 a day. It's ridiculous. It's expensive. It's incredibly expensive. One of the other programs that's sort of on the chopping block is, Medicaid does provide in nursing homes kind of, caregiver advocates. So advocating on your behalf in the nursing home for folks that, they don't have that voice. So that's another one that could potentially be cut at a time when, it's probably the worst case scenario at that time. That's an area where you really don't want to see cuts because as you pointed out, not the best of settings in all nursing homes. Right. So that's the problem. So the insurance industry has addressed this years and years ago, and they came up with long-term care insurance. And Glenn and I have both been around since the beginning. And they had these actuaries who priced it out. But when this started, when this whole crisis has been around forever, but with us living past 65, 70, 75, it just compounds worse and worse and worse. But at the time, when this whole thing came out, and I know back then you worked for a company that
was one of the pioneers in long-term care coverage. And back then, the actuaries were telling everybody, okay, 1 out of 2 people are going to need this. Well, 1 out of 2 is a lot different than 80, 70, 80%. 1 out of 2. They also had a calculus that you only need care for really, 2 years at home max and 3 years in a nursing home, and that's it. The odds are 2.5 years in a nursing home. I remember this like it was yesterday, mm-hmm. right? That's not the case. So you had all these companies that came out with product, and then they were adding compound interest and this and that, and they also thought that, they're not going to keep this product very long. They'll say, it's expensive, I'll drop it, like other insurances. But they all kept it because everybody that bought it realized, hey, I'm going to need this someday. And for those that have kept it, they've really benefited their families by having people to help work and not take away from their current assets that they had a plan in place. Maybe it was 20 years ago, 30 years ago, but the pricing became so expensive. The cost became so, and the insurance companies started dropping out. They said, we can't afford this. So they dropped out to where there's only a couple of carriers that offer like a pure, what we call standalone plan like they used to have. With that, companies began to get innovative and combine the aspects of long-term care with life insurance, with annuities, and Glenn has been at the forefront of this. And talk about some of these kind of combinations that may make it more affordable to have this protection than maybe a standalone.
Sure. Yeah. So, and I think you hit the nail on the head. It was, a lot of those types of solutions that were presented, under that standalone or that traditional model really was a perfect storm of things, what could go wrong in those products. Even just macroeconomically, interest rates tanked, so profitability for a lot of those carriers was going down on blocks of business at a time where the expenses were going up significantly. Ultimately, that got passed along to the policyholders in the form of increased premiums. So right. in order to maintain the same amount of coverage, their premiums went up. And to your point, most customers held on to their coverage because, they frankly got a pretty good deal on it when they bought it. So not a lot of folks let their coverage lapse.
And the ones that are using it aren't paying anything in.
Exactly right.
So the companies are just paying out. And one company I know, which was, let's say, bought a lot of business, is in deep doo-doo, and they're never coming out, no matter what they say. You went from an A+ rating to a B-, I think. I think they're almost a C rating at this point. And they were the number one carrier. They didn't get out at the right time, and they're suffering. And, people were saying, why is my price going up? Well, this is why.
Yeah, so the industry's answer to that was, to your point, getting innovative on the solutions that are being presented. So now you see long-term care options built into, whether it's on a life insurance policy or what we call a hybrid long-term care policy, which is kind of a combination of long-term care coverage along with a death benefit if you never end up needing care, and along with that came guaranteed premiums. So answering some of those objections that I think folks have around that standalone long-term care market, which is, well, what if I never end up getting sick and needing care? Right. You're one of the fortunate ones that didn't, but you've also paid a lot of money into something that you're not going to get anything out of.
Right.
So that's one objection. Then the other objection is, well, I don't want to pay for 10 years and then all of a sudden my rates double or triple to maintain the same level of coverage. So the industry really kind of introduced these hybrid products, which are long-term care focused, but do offer a death benefit should the client never need care or maybe only need care for a couple of months. You're still seeing a return on the dollars that you had allocated in. And then in conjunction with that are just, a life insurance contract that has what they call living benefit riders. So long-term care riders, chronic illness riders that allows you to actually tap into your death benefit as a living benefit. So you're accelerating that while you're living with a balance of that can potentially pay out when you do finally pass away. So, that sort of answered the industry's objection around it, around, non-guaranteed premiums. In a lot of these contracts, the premiums will be guaranteed. And the fact that there's a death benefit payout at the end of the day, making sure that, that you're made whole on what you had allocated into it, you're always going to get at least what you put into those policies back out of it.
Right. And a lot of people may have rainy day funds. Like, what am I saving this rainy day fund making 1% interest in a bank, which is absolutely absurd. Or even if you have short-term CDs and you're paying taxes on it every year. So if you put $100,000 in a bank, next year that $100,000 with inflation may be worth $95,000. And then you pay taxes on it besides, it may be worth $93,000. So we have all kinds of solutions that can help you, whether it be an insurance product, legal. You really need a combination effort, and you really need your family engagement to understand the need. You've been listening to the Main Street Code for Financial Success. Hopefully you got something out of it. If you need to get a hold of me, the best way is to give me a call, 631-647-4694. I could give you my email address. It's too long. Glenn, you can give your email address. That would be great.
Yep, it's glenn.usher@gmail.com.
And I thank you so much for doing the show. And hopefully you get something out of this, and give us a call with any of your questions. Thank you. Have a great day.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.